You think the US economy is still booming? What if I told you that 911,000 jobs is just vanished from the markets? Let me uncover what went wrong here, okay? Because this is the reality, this is not bull. Today, we're gonna go deep down into what this means for your wallets, also what is going on with the job markets, and what does this actually means for the Fed's next move, okay? So I'm gonna try to break this down very quick and simple for you guys, and hopefully you enjoy this type of content. If you do, just give me a subscribe, share this with another trader as well, and depending on the moves that we get today, I'm gonna actually do another video after this going over chart breakdowns for trade ideas moving forward. But first, let's talk about what is revision, right? So the Bureau of Labor Statistics, the BLS, right? They have delivered pretty much a very big number that came out from April of 2024 and March of 25. We had the biggest revised number of 911,000 jobs, right? Fewer jobs than we thought overall. This was the biggest downward revision since 2000, okay? So why is this bad? So this is what's gonna be more important. This isn't about a numbers game, right? Fewer jobs means that the labor markets is significantly weaker than what we was expecting, right? Because every single time we get a job report, it shows that the labor markets is actually stronger, but then afterwards it's showing that the labor markets is more weaker than expected. And it undercuts the narrative of a booming economy, right? It raises red flags on economic foundation because we've been hearing Trump's comments all day. Economy is booming, right? Job numbers are great. And when we see these numbers, it's not as good as what we expect. Okay, so political, right? It is a storm when it comes to politics, right? Donald Trump did fire the BLS commissioner due to this controversy. He's saying that the data is rigged. Do you guys believe that the data is rigged? Because what we're going to start getting now is politicians coming out saying that, oh, we can't trust this data, firing people saying it's rigged. Like, do we have a strong economy or we don't, right? You guys that live in America, what you guys think? Do people still work in good jobs? Are you still seeing people getting laid over, right? So we see this type of stuff that happens every day. But now let's talk about what does this mean for the job market? Bottom line, labor market strength is outstated. Businesses aren't hiring, okay? Unemployment ticked up to 4.3% and the jobs has gained across all sectors, right? From retails and professional services. So unemployment was around 4.1% this whole, pretty much from last year to now. And we could see that the rise of unemployment hit 4.3. The expectations was employment at the beginning of last year, they was expecting unemployment to hit 5%. Now they bring it down to at least like 4.5%. So unemployment overall still at all-time lows, but we're seeing the uptick, which is important. Long-term unemployment managedly, track workers are rising, right? So indicators is showing that we're in deeper trouble in the future when it comes to labor, that people is going to start losing their jobs. So that's what's going to be more important for us to focus on, right? Now let's talk about the Federal Reserve policy. So when it comes to this, right, markets is going to be expecting the Federal Reserve to still cut interest rates, right? This definitely this is going to give them a kick in the butt to show them, hey, data has been worse than what you guys have been expecting. Every single rate decision before, yeah, I was saying that the labor markets are still strong. We're focusing on inflation. Now it's showing that you guys should be focusing on the labor markets. You should be cutting rates that help the labor markets, right? With this type of number, the curiosity is this going to bring a 50 basis point cut, which I believe should be the main focus now is recessionary fears, right? Because the worst case scenario for the Fed is stagflation. Because if we get prints of inflation this week that does come out higher than expected, higher inflation, weaker growth, not a good example. Stagflation is not going to be good for nobody. So that's something that we're going to have to focus on, right? Now, this could reshape borrowing costs from mortgages and business loans, obviously, but we have to be concerned about the overheating, right? And that's going to be the main focus moving forward for the Feds. So one of the key takeaways, the job markets isn't as strong as what we thought, okay? Now the Feds have to act very strategically now. And the problem is when it comes to political situations, the Feds want to have their own independence. But with Donald Trump putting all that pressure, firing Fed members, saying, Powell, you should cut rates, what do you think the markets is going to look at it as if Jerome Powell does cut rates now? It's going to look like, oh, you are a puppet to Donald Trump, right? But what happens if Jerome Powell doesn't cut rates? That it looks like that he's trying to ruin our economy. So it kind of feels like Jerome Powell is a lose-lose situation for him, right? But at least you guys get the idea of this. So now for us, how do we take advantage of this as traders, right? With this type of print that came out, I will be expecting dollar weakness overall from a macro perspective because this indicates interest rate cuts still. This shows that we are having further easing in the labor markets. This should indicate the odds of recessionary fears coming in place, that the Fed should be cutting interest rates based off of the expectations of a weaker job growth, right? Now, when it comes to inflation, inflation is still hitting a target. But recently, we understand that Jerome Powell said that inflation rise is going to be temporary. We expect inflation to rise due to tariffs, but it's not going to be long term. So even if we get higher inflation, I still personally don't think it's going to ruin the odds of us expecting an interest rate cut, okay? So that's why I like the idea of a weaker dollar from a macro perspective, because now we're going to get into that cutting cycle. But now, when it comes to the equity markets, when we're talking about it from a recessionary perspective, if the markets look at this as what I was saying earlier, that this could be worse than expected, if that is the case, we can see that the stock markets actually push lower due to that recessionary outlook, okay? That could indicate those sell opportunities you guys will take advantage of. The only way I could see the stock market rise is if the markets are looking at this as a dovish reaction. Interest rate cuts does support stock markets as well, okay? But I feel that the recessionary outlook is going to be an important factor moving forward. Now, when it comes to gold, right? I like gold upside because this does indicate the idea of a recessionary outlook, okay? And then with the weaker dollar and the weaker yield should give you more confidence to take gold higher, all right? So I want you guys to look at it from that perspective. Don't just be buying randomly, but just look at market structure. You want the markets to prove to you that it actually is moving based off of a dovish reaction or a risk-off reaction. That's how you're going to be able to take advantage of those trades. So I'm live with my private group every day focusing on these events. We're going to be paying attention to inflation data moving forward. You got access to the course as well if you guys join the Discord group. If you guys are interested, link in the bio or message me on Instagram so I can give you guys further details. Hopefully this video helps you guys out, understanding what's going on in the markets, what's actually important, how to prep yourself for these events and take advantage of it, right? And understand the Federal Reserve perspective, right? Because we got to put ourselves in Fed members' shoes. What would we do if we was a Fed member and we see this data, right? How would we expect the markets to react, right? So this is how you have to think like an analyst. I hope this helps you guys. And again, if you guys like it, give me a like so you can help the algorithm. I wish I had videos like this when I came up in my trading career. So hopefully this guys helps you out, guys. Have a good one.